welcome back to BLOCKTV and Chainbreakers. You may remember her from the high-profile Libra hearings on the Hill last year, but Meltem Demirors has been one of the most famous voices and leading women of the cryptosphere for a while, way before Libra. A venture capitalist, you may know her as the Chief Strategy Officer at CoinShares. She also owns her own blockchain startup company, Shiny Pony Ventures. Above all, she joins us now from New York City, and it's a great pleasure to have you with us, Meltem.
Thanks, Ayel. It's great to be with you.
Lovely to have you on. I want to touch a little bit about background because both you and I are women. And sadly, in 2020, women are still a minority, or a minority in any business meeting. The glass ceiling may have cracked, but it surely ain't broken. How hard was it for you to infiltrate the sphere? How did you become attracted to it to begin with?
Yeah, I think for me, I've always been a person who just believes that working hard and being passionate about what you do is the best recipe for success. And so when I joined the crypto industry, one of the first things I did is I just invested a lot of my time, my energy, my passion into meeting people, trying to help people regardless of whether they were investing in my firm or I was investing in their company. I think a lot of the world is really about relationships and creating genuine connections with people, and especially in an ecosystem like the crypto community, a lot of it's really about the merit of your ideas and your willingness to engage with people and explore different views of the world. So a lot of what I've been doing over the last 6 years, which really hasn't changed from the days I was, scrapping to where I am now, is really spending time meeting with people, trying to understand what they're trying to build, what they're trying to do, and then just working hard and doing my best to be helpful, to use my expertise, my insights, my network. I think the other piece that's really important is developing relationships with people in other industries. So I've been really lucky to have a lot of mentors in the VC ecosystem, to have had mentors in the financial services community, and to have had a lot of people in the crypto community who've taken me under their wing and given me an opportunity. And so now I'm really trying to pay it forward and make sure that when I have opportunities, I can mentor people, help them on their path. It's such an important part of trying to build an ecosystem and a community that reflects the diversity of skill sets, diversity of experiences, and just diversity more broadly.
Diversity being the key word. And I think, you understand diversity. I want to touch a little bit about your background, and correct me in the middle of it if I'm wrong. I believe you are of Turkish descent, but you grew up in Europe. You flourished as a businesswoman in New York City. That's not a conventional route, I would say, in the financial world in the United States. How does your background benefit your work and inform your strategy today?
Yeah, so I started my career in trading. So all through university, I worked on a trading desk. And when you work on a trading desk, my job, I was the most junior person. I was doing a lot of the analysis on the market. The trading desk I worked on, we focused on methanol, ethanol, and derivatives of those chemical compounds. And so a lot of what I spent my time doing is really trying to understand the fundamentals of the market. I would pick up the phone and call a corn farmer in Iowa to ask how high the corn was that year, because that was going to have a significant impact on ethanol yields. So one of the things I learned early on in my career as a trader is it's about, again, relationships. It's about finding sources of information that other people may not have. And it's about doing really thorough analysis and assessment and looking for factors that other people may be missing that are going to give you a unique edge. Then I went into M&A consulting in the oil and gas industry. And in that industry, the oil and gas industry, when I joined it, went through fundamental shift due to some technological breakthroughs that made things that were economically infeasible before possible and profitable. And that change was hydraulic fracturing, or the ability to extract gas and oil trapped in rock deposits. And so one of the things I learned there is, in order for me to be effective in my role, I had to spend time actually visiting wells, visiting oil sites, understanding what people were doing in the field. When I started moving into the mining and manufacturing space, same thing, going and visiting factories, getting an understanding of how people are working, what's involved in their day-to-day, their state of mind. It's very easy to sit in a corporate office where you're surrounded by secretaries and nice furniture and to come up with plans. But you have to remember that at the end of the day, you're talking about real people on the ground who are going to be implementing those plans. And so one of the things I learned in my consulting experience is it's really important to actually think about who's going to be using the end solution or end product you're designing. And I think in the crypto space, that's a big challenge we have, is people will sit in a room, draw on a whiteboard or sit at their laptop or on Twitter and come up with an idea that they think is really exciting and really compelling. But at the end of the day, I think we sometimes forget that the end user is an average person who has a lot on their mind. They're not necessarily spending a lot of time on crypto Twitter.
Yep.
And so talking to a person like that, designing and building something that's compelling to them requires a lot of consideration as to who that person is, what they're thinking about, what their experiences to date have been. And so that's something that I like being able to bring to the table with my portfolio companies is how do we think about approaching the customer, whether that's a consumer, a small to medium-sized enterprise or corporation, or potentially a government.
Or potentially a government. What would, and you know, and you're doing a fabulous job of that. You know, there are very few people who are as poised and eloquent and make things understandable, as you just said, to the greater public, or let me put it this way, you know, to my 85-year-old mother. That said, you had this, you know, obviously you came from oil, you know, you came from this, I would say, you know, mainstream, heavily manly, most likely sphere. What was your Bitcoin moment? When did you find, you know, when did you find yourself diving into the rabbit hole?
Yeah, that's a great question, and I think this is the perennial question for all Bitcoiners. So I got interested in Bitcoin in 2012. I was still working in the oil and gas industry, but I was traveling a lot, working 100-hour weeks like your average consultant, living in Norway and China and in Russia, and working on these projects in places in the world that most people wouldn't think of traveling to. So I was online. I spent a lot of my sort of teenage years and adult years on the internet, in forums, in chat groups. I'm still a big Reddit user, and I love online communities because you can be anyone in these communities. You just have a handle, and you can participate in conversation with people all over the world who you don't know who they are, you don't know their background, nobody has a reputation that they bring from the outside world. All of it is sort of based on merit. And what I really liked about the Bitcoin community when I first started delving into it is just the level of intellectual engagement that people had. I mean, Bitcoin more than anything else, yes, it's technology, yes, it's money, it's an asset, but more than anything else, it's a social movement. There's a strong philosophical component to what the Bitcoin community is passionate about and what they believe, and there is a real desire to create systemic change using this technology. So I think that's one of the things that really attracted me and also scared me initially. Then 2013 to 2015, I was in graduate school at MIT, and at the time there was a lot of activity with Bitcoin on campus at MIT. Right. A lot of the undergrad students were mining Bitcoin in their dorm rooms, building Bitcoin faucets. There was an MIT Bitcoin club that was really active. I, at the time in business school, was more focused on the venture and hedge fund side. I was really thinking about what I wanted to do with my career. And then as I started to get closer and closer to leaving graduate school, I met Barry Silbert, who was starting a company called Digital Currency Group. And I started thinking about, yes, I could go to a venture firm and be a principal. Yes, I could go to hedge funds and try to work my way up the ladder. Or I could take a dive and go work in Bitcoin and do something totally different. So I was someone who had never really taken big risks in my life, and I said, why not? This is an opportunity to try something totally new. A lot of people thought I was committing career suicide. I think a lot of my classmates were quite skeptical. A lot of my friends were quite skeptical. But I just saw that there was this really vibrant, really engaged, really interesting community developing, and I decided to join it and spend all of my time in it, and that's what I've been doing for the last 6 years now.
Seems to be working quite well. Now, you splashed into mainstream knowledge, some will argue, in last year's Libra hearings. I just want to remind our viewers of one of those viral moments across from Congressman Davidson, lovingly titled on Pinterest, "Shitcoins colloquially." Let's have a listen.
Highlighted a lot of background information about Bitcoin and about the immutable distributed ledger and the benefits of that, decentralization versus centralization. A lot of people in this space will use a phrase that you may be familiar with. There's Bitcoin and then there's shitcoin. Are you familiar with that phrase and what people might mean by that?
I am.
So could you elaborate on how people would differentiate the two?
Absolutely. I think the idea here is Bitcoin has had a long track record. The network has been operating for 10 years. The Bitcoin network has been tested. The decentralized nature of the Bitcoin protocol has been tested. People have tried to co-opt control of Bitcoin source code and push it in certain directions that benefit their business models. And this network and this protocol and its open source governance have withstood that test. It is robust, it has been tested, and it has had the benefit, frankly, of spending its first 5 years in its nascency, sort of operating in this environment of innovation and not having a lot of regulatory attention.
Golden moment for the sphere, some would argue. I don't know if you agree with that. But when it comes to Libra, first of all, I'm wondering with you, what did it do for the conversation? And do you think it's dead?
Yeah, so number one, I think the really important thing about the Libra conversation is that it really highlighted for the first time the difference between Bitcoin, other cryptocurrencies, and something like Libra, which, yes, it's a digital asset, but it's not a cryptocurrency. And so my goal in the congressional hearing was really to highlight Bitcoin and why I think Bitcoin is so unique and so compelling. My personal views on Libra, I commend Facebook for spending so much time, energy, money, and political sort of effort on trying to create a conversation and trying to push Libra forward. I do think that there are obviously a lot of concerns that people have about Libra. Facebook is the largest social network in the world. Q4 results just came in. 2.9 billion people around the world use a Facebook product on a daily basis. That's a lot of power. And I think Facebook is, it's a privately owned corporation. It's not a public utility. And its mandate is to maximize shareholder value. And if the way to maximize shareholder value is to become a financial services platform, then Facebook has every right to pursue that. And I think it makes a lot of sense that that's the direction the company is going. However, I think from a civil liberties and civil rights perspective, people have the right to privacy. And one of the big topics that's been debated in Congress and in governments around the world is what rights do people have to privacy in the digital age? And I have a lot of concerns about the ability to couple people's location data, people's identity information, their photos, their relationships, their online communications with their financial transactions and their financial data. Right. It's very, very difficult today to have any modicum of privacy. The 5 largest corporations in America are Apple, Google, Microsoft, Amazon, and Facebook. And so one of the big challenges there is these 5 companies know more about us than we know about ourselves. Mm-hmm. And one concern I have with Facebook and the direction Libra is headed, yes, I think there will be positive potential new products and services brought to market, but the question is at what cost? And if it's at the cost of consumer privacy, and if it's at the cost of personal liberty, then I think that's a really dangerous and slippery slope. So I think this is just one of the many challenges around something like Libra that governments are grappling with. And I think the response we saw, by the way, I don't know if Libra will succeed or fail. Will it launch? I absolutely believe it will. Will people use it? Will it be adopted? I don't know the answer to that question, right. And I think time will tell. What I do think has happened as a result of Libra that's very important is, as we've seen, central banks historically have been very critical of Bitcoin. Many central banks have said, Bitcoin is not useful, plays no role in the modern economy. It's not a threat to the US dollar. Now with Libra, every central bank has figured out, wait a minute, the opportunity to digitize the central bank balance sheet and the opportunity to digitize our national currency is actually a really powerful tool. And so over the last few months, what you've seen is central bankers in Davos coming together. I'm part of the World Economic Forum Blockchain Council. We have a central bank digital currency consortium that I'm a part of. And all these central banks are now very interested in understanding how they can use this technology. And the second piece is the US, for the first time, the US Federal Reserve, who has historically said, no, the US doesn't need to digitize the dollar, is exploring the opportunity to do so. So I think it's starting to push and create competitive pressure on central banks, and more importantly, it's creating fundamental questions in the world about the supremacy of the US dollar, which has historically been the global currency.
Well, first of all, I'm glad you put me down the road of the CBDC, because indeed after Davos we saw the conversation expand on that, and I think it's no secret we're all expecting China to actually, as Zuckerberg said in that hearing, to be the first one to launch it. Do you think the United States is a bit too late in the game?
No, I don't think so. Look, at the end of the day, I think one of the things that comes up often in the crypto community is the stark differences between how things operate in Asia, in particular in China. When people say Asia, I think a lot of them are thinking mentally of China, but also Southeast Asia. If we look at the Philippines, Indonesia, Vietnam, these are rapidly growing economies. And then they contrast that to what's happening in the United States. I think in China, the approach is quite a bit different because China really, for all intents and purposes, is a modern empire. It's centrally planned. Leadership comes from the top, from Xi Jinping. And so for them, when at the top it's decided that they want to implement something, it moves very quickly because it's a very hierarchical structure. In the US, our government's structured very differently. We have different agencies, we have different political parties, we have checks and balances that are supposed to ensure that different voices are represented in decision making. And so I think in the US, historically, things have moved a bit more slowly. It actually came up in the Libra hearings. One of the big challenges is it's not even really clear what regulatory agency in the US should have oversight of digital currencies. The SEC obviously is concerned with primary issuance of assets, and securities. The CFTC is concerned with commodities markets and market fairness and market oversight. You have the IRS who's concerned with taxation, the FBI who's concerned with criminal activity. You have FinCEN, which is concerned with financial criminal activity. So there are a lot of different agencies that all are trying to wrap their heads around what role do I play and where does cryptocurrency fit into my mandate. So I think one of the things that's been highlighted here is just the sharp contrast in how different economies, different governments operate and what that means about how quickly these countries can move. And there are pros and cons to both sides. I do think one thing that we can't underestimate, though, is people's desire for the dollar. So I come from Turkey. I grew up in Europe, and I spent a lot of my time traveling. People around the world, what they want, what they like, what they would want to hold is the US dollar, and they want to hold a physical US dollar. And I think that's actually one of the things that's so powerful about Bitcoin, and what makes Bitcoin really compelling is it's an opportunity for someone to actually own their asset. They don't have to give control to a bank or to a corporation. They can actually own their own Bitcoin, and they can have trust in the validity of the service they're using and of the currency they're relying on, which is something that a lot of people don't have in the countries where they live, as is seen with monetary devaluation in numerous countries around the world. So while China is moving quickly and their efforts around digital renminbi are certainly creating pressure, particularly when it comes to global trade wars and currency wars, I think we can't underestimate the desire of people to hold money that they trust and they believe in. Historically, that's been the dollar. Can it be the renminbi? I don't know. Could it be Bitcoin? I think yes, but obviously there's a lot of work to be done to make it easier for people to understand Bitcoin and own Bitcoin.
And it's interesting that you mentioned, first of all of this, yes, and you mentioned also the SEC. You and I have a chance to speak actually after what many refer to in the sphere as the fateful day in court between Telegram and the SEC. Of course, it's just an injunction. When one can argue they decided not to decide yet. What is your take?
Yeah.
What is your take on the Gram token? Do you think that also is dead? Do you see this happening?
Yeah. So Telegram is an interesting case. Telegram actually was the first token offering that a lot of investors who historically had not participated in cryptocurrency participated in. Telegram's obviously a well-known platform, over 300 million users, which is pretty large as far as platforms go. It's grown really quickly, and obviously both of the Durov brothers, who are the founders of the platform, have a big focus on privacy, which obviously appeals to people in the crypto community. I think the biggest challenge with the Telegram token and the Telegram community is if you look at other tokens that have launched, I think one of the biggest components of success has been the ability to engage a really active community of token holders. And the idea is that people who participate in the network are incentivized to participate in the community. And so we saw this with Bitcoin, for example. A lot of the enthusiasm around Bitcoin came from people who were early holders of Bitcoin, and then the Bitcoin bug spread and more people are holding Bitcoin, and the more people think about it and hold it, the more involved they get. They start building businesses on top of Bitcoin. It's sort of a flywheel effect that starts going. The challenge I have with Telegram is the only investors in the Gram offering are professional investors because they had a lot of strict requirements, minimum check size of 10 million. They raised a lot of money for the token, but it's still not really clear how the token is going to be used in the Telegram platform. And so I think the big challenge here is when you have a group of only professional investors and they're not active users of the Telegram platform and they're not building applications on top of the Telegram Messenger app, it's just difficult to see where and how the Gram token is going to be useful in this ecosystem. So I think that's a lot of what the discovery process in this SEC case has been about is, well, what is the Gram token supposed to do? What is its function in this network? And then really it's, okay, well, who's actually building things with this platform, with this technology? It's not really clear. That being said, I'm not a judge nor a jury nor an executioner. I'm of the belief that people and investors and users get to decide what they want to use. So at the end of the day, I think Telegram should launch. I think at the end of the day, you know, there should be an opportunity for projects like these to come to market. Now, whether that'll be allowed, I don't know. I'm not a legal expert. I can't opine on that. But I think the big question will be, again, like Libra, will it be utilized? Will people actually build with it? And I don't know the answer to that question. What we've seen so far is there's been very little communication from the development team about Telegram.
Sure.
There's not really any clean documentation of the code itself. There's actually some people who've been working to backwards engineer the protocol and write some of the technical documentation for it. So I think in terms of building that community and getting people to engage and actually use this technology, I have not seen a lot in that arena. But that being said, this is crypto. In the last 6 years, I've been wrong about many things. People have surprised me time and time again. So who knows what will happen. But I think there's a lot of work required to engage developers and to get people building on top of the platform. And I just haven't seen a lot of effort from Telegram on starting to develop that.
To show that, or be transparent in that respect. A bit more, just because this is fascinating, we seem to be on the cusp of a major move upside. Needless to say, some would argue there's too much discussion of price in this narrative when it comes to Bitcoin. But yesterday, we had a chance to speak with Binance Strongman CEO CZ, ponder with him regarding this upcoming halving. And if he thinks it is already priced in, this was his response. I'm going to have you hear it for a second.
I personally believe the halving have not been priced in, just looking at price, but this is a personal opinion. I could very well be wrong. The halving should have a couple of different impacts. Historically, we've seen the halving do impact price positively. Historic events does not necessarily predict future events, so don't take that too literally. But there is a psychological level to it as well. It will cost miners almost double to produce a Bitcoin. In a sense, and psychologically, those guys will be unwilling to sell below that price. So we will see. So there's a psychological level to that as well. Again, the cost of producing something should not impact the price of something. The price of something should really be driven by demand and what people are willing to pay for it. But there is a psychological impact there. We need to be cognizant of that. And more importantly, the overall new Bitcoins coming to market will be severely limited. And over the last little while, we see a lot more users coming in. So we see a lot more traders, a lot more people using apps coming in. So the demand side is increasing, the supply side is decreasing. So economic theory tells us that you should increase the price will likely increase. But again, that's based on theory.
Meltem, do you agree?
Yes, so I think CZ raises some great points. Our team at CoinShares actually publishes a semi-annual mining report where we analyze the cost of production for mining a Bitcoin. Now, one of the things CZ just said is he doesn't believe that the cost of production matters so much as the demand for Bitcoin. I actually do think the cost of producing Bitcoin matters greatly, and one of the things that's happened over the last year If you've been reading the news, we've had a lot of news about new mining operations being spun up. A lot of them are being spun up here in the United States, particularly in Texas and in other oil-producing regions. So this is where my two worlds begin to come together again. Now we have the energy sector starting to look at ways to capture trapped energy or energy that's not cost efficient to bring to market. They're saying, okay, well, Bitcoin effectively is a monetary battery. So I can take this energy and use it to produce and mine Bitcoin and other cryptocurrencies that effectively allow me to monetize the supply of energy I have that I can't bring to market. And so we've seen a lot of investment by major players. Peter Thiel-backed Layer 1, which built a $150 million facility in Texas that just went live. They announced that yesterday. Fidelity, Amanda Fabiano is their director of mining. She's a good friend of mine. I'm very proud of what she's done. She's helped build out a mining facility for Fidelity. Blockstream is building a mining facility in Canada. Hodl Ranch is building a mining facility. There's a company called Coast Energy that's enabling people to mine in North Dakota on well sites there. So we've seen a lot of investment in bringing new capacity online, and that capacity is just starting to come online now. And actually, I wrote a piece about this back in 2018 called Drowning in Tokens. That was all about my experiences in the energy industry in 2012 through 2015, where the market got flooded by a glut of supply, but there was no demand for it. And I think we're seeing the same thing here with Bitcoin mining capacity. A lot of new mining capacity coming online, quite expensive. And what's going to happen is at the halving, obviously, every block you get half the Bitcoin you got before. So unless the price of Bitcoin in the market is much higher than it is today, a lot of those miners are going to have trouble making money in that environment. Now, on the demand side, what's interesting to note is today, if we look at where demand is coming from, the largest sources of demand for Bitcoin are Square, people in the Cash App buying Bitcoin. So we see every day about $2 million of Bitcoin bought through the Square app. And if you look at the numbers on Bitcoin's contribution to Square's bottom line in their quarterly reports, it's growing quarter after quarter. The other two big drivers of demand, in my view, are structured products. So Grayscale, which is part of Digital Currency Group, where I used to work, and our own product, XBT Provider, that's a CoinShares product, they together consume a large amount of the Bitcoin supply in taking in this Bitcoin and creating shares or certificates out of it. And so if we look at what's going to happen after the halving, if we see the same level of inflows and demand on Square, Grayscale, and our product XBT Provider that we have historically, that alone will account for 50% of the new supply of Bitcoin.
Right.
And so when we think about supply and demand, right, which are the primary factors, in my view, in determining the price of Bitcoin, there's no fundamentals, there's no cash flow underlying it. Bitcoin is driven purely by its own supply schedule and the demand for it. And then the third factor we can't forget is the dollar, right? So what's going to happen in the macro economy is also really important, particularly in an environment where we're seeing negative yielding sovereign debt. Yesterday, actually, we had the first instance of negative yielding corporate debt. LVMH, which is the parent company of Louis Vuitton, owned by the French billionaire Henri Arnault, they announced yesterday that they issued the first negative yielding corporate bond, meaning that people are giving LVMH money for, they're giving them more money than they expect to get back in the future. So basically, I'm giving LVMH $1 today to get back 95 cents tomorrow, which is an indication that investors are not confident in the future of the economy. And so I think if we look at these three factors, demand, depletion or supply schedule, and the dollar, i.e. the macro economy, all of them create a very optimal environment for something like Bitcoin. So in my view, you know, the halving, price predictions, these things are always tough, but what we're seeing right now and the amount of interest we're seeing in digital currencies as a result of Libra, central bank digital currencies, coronavirus, global political unrest, macroeconomy, all of these factors together, I think, are creating a really compelling argument that Bitcoin could see a major breakout going into the halving. Now, that being said, human beings are predictably irrational and predictably unpredictable.
Yeah.
So it'll be interesting to see what happens. I don't really have a strong view either way, but if I look logically at the data and the factors that we think will drive the price of Bitcoin, depletion, demand, and the dollar, I think they're all lining up to create a very exciting sort of environment for Bitcoin.
I think a lot of people are happy to hear that one. Finally, First of all, finally, your favorite moment of 2019, I think where I fell in love with you, was a tweet that actually reminisced on you throwing chocolate coins. There we go. As I reflect on the year, throwing chocolate coins out of a toilet on stage is one of the less strange things I've done. Keep it weird, my friends. I love that. What will be your weird moment in 2020?
Who knows? I am speaking at MCC, or Magical Crypto Conference, in New York again in May. That's the conference where I brought the toilet on stage. Look, my whole point with this is, and this goes back to, I guess, where we started the conversation, which is where I've sort of gotten to in my career and how that's happened. Life is really short, and life is really interesting. And my view has always been that you should do things you enjoy, and you shouldn't be afraid to, be yourself and be a little strange. Crypto is weird. Crypto is very strange. We're a bunch of crazy people who believe in magical internet money. And I think sometimes in these conversations in our community and in our industry, people are very serious. There's a lot to talk about regulation. People are trying to bring crypto into Wall Street. But I am always sort of drawn back to the fact that, we're a community of people who have ideas that are not mainstream. We're a group of people who care about a set of ideals that are not mainstream. We're all a little strange in our own way. So I'm trying to have some fun in the process and really enjoy it. Like, life is meant to be enjoyed. And maybe this is a Middle Eastern thing. I know in Israel, people very much enjoy life. The same thing in
no
Turkey.
matter what happens, exactly.
Yes. So in my view, like, life is meant to be enjoyed, and I want to remind people that this is supposed to be fun, and we should have moments where we can laugh and be proud and be excited of everything we've achieved. Like, yes, there are challenges, but at the same time, life is good. It's better than it's ever been on this planet for humans. And so I want to celebrate and have fun, and I want to encourage other people to step into their own weirdness and their self-expression. And so I love it when people reach out to me and say, hey, because you told me this, I went and did this crazy thing that I wouldn't have done. So if me making fun of myself and bringing a toilet on stage encourages other people to be their most strange and most fun and most authentic selves, I am fully in support of that.
Amen to that. Now, Meltem, I just want to promise you one thing. I will be weird with you in 2020. And I think we should all take that advice and live a little. Thank you so much for this interview.
I love that.
And that was
Thank
Meltem.
you for having me.
Amen. I hope to have you again. And thank you for being with us. CoinShares Chief Strategy Officer Meltem Demirors on BLOCKTV. We were BLOCKTV, and we'll be right back.
For more news and updates, follow us on Twitter.